Hey, hey guys, good morning, good morning, good morning. I'm going to share my screen. I am in trade already here, but let me just do this. Hang on a second. Let me move this over to you guys. Share screen too, just so you guys can see it. Obviously you can't quite follow it because trade just kind of jumped just before we started Zoom. But on futures, I'm in at 44. I think let's see what the Nasdaq is 59 on the move here. So we're looking for 69 on CFDs. It actually looks like, what's the close here? Close is 59. Yeah, looking for 69 on CFDs. And let me see what the Futes are doing. Futes are, where am I in at 44, and I'm looking at 54 on futures. So we'll see. We'll see if that completes. But I'm just jumping. We're just jumping right into the action because it just popped up. But I have a lot. I have a lot to discuss with you, so we can just kind of watch this trade, see if it flows out a little bit, and then I'll just take the futures off here. We can just watch the CFDs since everybody watches the CFDs here. Maybe it'll work, maybe it won't. We'll see. But I'm going to share with you some interesting developments that I kind of did on the combo. I do have really good news. I have the final version of the indicator, and then I also have the beta versions of the EAs, both for 4 and 5, for you guys to download in the tools folder. So I can show this to you. We'll come off the screen for just 1 second. So if you guys go into the proprietary, into Combo Trader, you're going to see the beta of 5, the beta of 4, and then the alerts, which are the final, both 5 and 4, right over here for you. I think I'm going to, if you're in the CFD at all, you could probably take the trade here. It looks like I'm going to TP. Is this going to TP for me? Yeah, it looks like I TP'd. Let me see. I can't even see my own thing here. Let me see, full screen. Yeah, I'm TP'd. Okay, the trade TP'd in case you guys, in case you guys kind of hopped on the trade in the last second. It definitely TP'd both on futures and CFDs. So that was, it's a good way to start the day, even though I'm sorry, we kind of started the day into kind of a melee. I'm actually, I'm starting to wonder. I know I was so hardcore about let's start at 10, but I'm really starting to wonder. I think the really proper time for us to trade is 9:45, 10:45. Like we've just passed up the first 15 minutes of insanity, and then it just, because what's happening is that obviously we're getting the setups for the 10 o'clock, but if starting at 10 o'clock, something, I don't have that 15 minute of prep time. And we missed the trades as a result of that move. So what do you guys think? Maybe next week we just go straight to like 9:45, 10:45. It's also easier for a lot of people because it's not as late. But anyways, be that as it may, let me know. Let's get big, and let me just kind of show you what's going on. This is the Dow. Let's get into Nasdaq. Oh, sorry. Trying to run so many screens here. Here's good Nasdaq. Okay, here's Nas, and again, this is 4. 4 is just like such a shitty little. You know what? So 4 just has horrendous graphics, right? And it's constantly going to do this back and forth fill. So for me to really, hang on a second. Let me just take you to 5. Let me go to full screen on 5. Okay, I'm just gonna. This is the 5 indicator. Let's just look at the indicator on 5 because it's so much more elegant and so much cleaner on 5. You guys can actually see the triangles, right? So in this version of indicator, yeah, everybody's good on 9:45. Yeah, I think that's what we're gonna do. So first of all, let's understand what the proper variant of the indicator is. I want everybody to make sure, and this is, I'm on 5. The 5 variant is, again, this is so confusing. I'm sorry about this. The 5 variant is 1.60. Okay, that's the 5 variant. Now let me just get off of this thing. That's the latest 5 variant. Let me just get off this thing and let me go to the 4 variant. The 4 variant is, oh, I gotta get, damn. Oh, that's why it's over here. Ah, damn. That's why. Okay, hold on a second. You know what? I think I may be able to stay on 4 because I had a double thing on this. Okay, hang on. Control I. Sorry, let me just delete this thing and start it up again. Close, lay down combo. No, what the fuck is this? What? No. Cancel. Oh, sorry. I'm gonna need expert advisors. Sorry. Combo alerts. That's what I want. Combo alerts, yeah. 5, if you're in 4, the version is 170. If you're in 5, the version is 160. So I'm gonna put the 170. It still sucks. If you still see the, see how bad the visuals are. By the way, sorry guys. Yesterday when I was teaching MT4, everybody said to me the cursor is really horrible. The cursor is like white, you can't see it. So tell me if this is better. Let me just hang on a second. We got plenty of, today is going to be like one of those change cursor, change mouse pointer color. Hang on, I'm just going to go into my settings and change pointer size and color. How do I change my color? Damn. Change mouse pointer. Color filters. No. High contrast. No. Mouse pointer. Where's my color? Oh, change pointer color. Black. Okay. And let me get bigger. All right. Tell me if this is better. Can you see my pointer a lot better here? Yes, no? Because people were complaining that you couldn't see my pointer well. I just wanted to make sure. Yes? Okay. All right, cool. So this is good. All right, anyways, so MT4 still sucks as far as visualization. What I've tried to do on this, I'm gonna go to MT5. Excuse me just one sec. Oh man, I'm dying. Okay. On MT5, you can really see this very clearly. And let me not go to full screen. Let me just go to basic screen. Okay, let me just view, just kill this. Where's my stop toolbox. Okay, take the toolbox away. So now we have the control and as much of the full screen as it. See, like on the 5, you can really clearly see the triangle. The triangle is basically a symbol of a strong trend. Like this is strong trend, meaning it's a higher high, higher low trend, versus if you have and today we've had like mainly strong trends both down and up, versus a small arrow, which tells you it's a down signal, but it's not a strong trend, right? So that's sort of what I did is that's the look and feel of the indicator, and I got rid of everything else, the reverse signals, the dips, just because I really want clarity. Really? Okay, so no, everybody says looks the same. Wait, are you saying that there's no difference? You guys seeing the cursor the same way, that the white, black, it doesn't matter? Is that what you're telling me? I had so many people bitching at me yesterday. Is this highly visible to you? Like, can you see this well? Still tiny. This looks tiny. How can this be? I have like a huge size. Huh. Do you have full screen? Is everybody blown up on full screen? I wonder if I can go. So maybe if I could annotate mouse. No, this is mouse. Spotlight, draw, text. No, I can't. There's nothing here that I can do that. We have the horizontal breakout bars. Fumihiro, do you not see? Okay, let's just make sure you guys are seeing what I'm seeing. Jesus Christ. Confirm to me, yes. You see a blue bar. Confirm to me that you see a little black and white triangle. Correct? Yes and yes. Okay, excellent. So this indicator can be very flexible. You can put all sorts of arrows on it. What I've done is I stripped away everything but the trend break indicator, and all we're seeing is the strong trend breaks and the weak trend breaks on the indicator. And I just want to run through my thoughts with you guys on a couple of interesting ways to trade this. Okay. And just kind of show you just like the radical difference in execution when you consider one thing versus the other, right? So first order of business is, and it's not a surprise because NASDAQ is you can put them back. Fumihiro, everything you can put the body dip back. You can do whatever you want. In other words, you can just go in here. Let me just sort of show you. Okay, let me make sure everybody understands. I am looking at the chart this way for a very particular purpose, to give you clarity of vision, to make you understand what I'm trying to do as far as strategy, and to have you trade just one thing only in this particular way. That's all I'm doing. You can go back into properties. You can, and what I've done is I've suppressed everything else, but you can enable this like this. You can make it true. You can make it true. Okay. You can make everything true. And if you did that, close, you will have all sorts of arrows all over the place coming in. Okay. That's not what I want to do. So that's why I specifically killed this thing. Let me do it this way. Just combo. That's why I specifically just did it this way. So don't confuse the fact that the way it's working is this the only way it is. It is not. It can be any way you like it to be. It's just for my purposes right now, I only want it to be this way. Okay? Is that clear? Okay, cool. Oh yeah, you can also, set the arrows to like huge size. It's just like this is the defaults for me. Just I'm looking at it pretty visually, pretty clear. If I set it to too big, like let's just say just for argument's sake, we can play around with this thing. Where am I? Properties. Visuals. We go into visuals, and the trend break arrow size is like 1, right? And strong trend break arrow size is 3. So if I wanted to make it like Karen was saying, if I wanted to make it 10, like this, and say okay, it's massive, right? It's just like huge. For me, I don't like it, but if it's easy for you guys to see, we can just keep it like this. Like maybe for demo purposes. By the way, looking like we might be setting up a sell signal here. Okay, let's watch this right now. Let's see if this possibly comes in as a sell signal. I don't, this it goes a little bit against what I wanted to show you right now. But let's just, we'll consider this. If it's a sell signal, we might take it. Just bear with me a sec here. Let me see. We got 20 seconds. Staying as a sell signal. It's I don't know if it's going to be a good one, but I'll stay with a 54, 55. So it's going to trigger me into a trade somewhere. Okay. So it's in the, it's going to trigger me into a trade somewhere. I've been trading this with a 10-5. So it means I'm looking for 10 points. And right now, I think I'm going to take like 5 points here on I took 5 points off my algo. Let's just kill it, but it might actually go full 10. Yeah, it might have actually gone full 10. Okay, it's good enough. I just, I don't necessarily kind of want to trade right now because I wanted to show you the thought pattern of the process. That's why I didn't want to, but if you took the trade, so this looks very clear. Okay, great. So Connie likes this. Okay, it's fine. Then this is exactly the way I will do this for teaching purposes because that's the most important thing. I need you guys to totally visualize what I'm trying to show you. So this looks much better. Great. Okay, awesome. All right, hopefully you guys took it. It was at least good for 5. Definitely, possibly good for. It's actually good for 10. It came in at 70, 90 was a bit, so fine. I took like 5 out of it. I think. Yeah, I took like 5 or 6 out of it, so it's fine. Yeah, Karen. I'm waiting for Karen's comment before I go on. Karen was actually okay, good. So I'm glad the screen. I'm sorry, guys. So my apologies if the screen wasn't looking clearer before. It's completely a function of just me looking at my own screen and not realizing what it looks like from your end. So hopefully this from now on, that's exactly how we're going to teach it, so everybody can see it. Anyways, be that as it may, let's focus on the trend breakout strategy and consider different variants. Consider a couple of really interesting different variants. First and foremost, let's just consider the long side. NASDAQ is all stock indices are long bias instruments, right? Until and unless the bubble is over, the trade on any given day, as a matter of fact, the trade on any given day, I believe throughout the history of the stock market is 53 to the long, 47 to the short. That's the reason why you have upward drift. That's why buy and dip works. In other words, there's a small but significant bias to the upside. So trading buy only is interesting. What's cool about what's cool about the algo, which is on here, right? Let me just sort of show you. So I'll show you my version. Is one of the beautiful things that we've done is that the algo can trade, long only, short only, long and short. It can trade strong break, any break, reversal or dip, and then it has a whole bunch of different settings, including dynamic stop settings, including 2 exit structures, including trails. Like this, there's a lot of stuff there. Have a good time playing around with all the buttons. I really gave you like every possible variant here. But from my perspective, so let's just trade long only. And then let's make the second condition, which is let's trade long only during the most liquid hours when this strategy has the highest chance of success. I define the most liquid hours as 9:30 GMT. That's essentially like, London opening till 19:30 GMT, which is like, no, excuse me, till 1900, basically till 3 p.m. I'm not going to trading the last closing hour is subject the last closing hour is just like the first opening hour, too much volatility, not worth it. So basically 4:30 in the morning, New York, till about 3 p.m. New York, or 9:30 GMT to 1900 GMT. That's the sweet spot. It doesn't mean that, that you won't be able to make money in any other hours, but I'm talking about trading on a continuous basis. I'm going to take every trade within that time frame to the upside, right? And let's just start at the beginning of the week, just for argument's sake. So beginning of the week was 05/04/2021. Okay. Oh no, sorry, I got to do this. I have to move my screen. Just one sec. So I'm showing it to you on futures just because I'm on the futures chart. It's easier to see. But okay, so 5th of April, beginning of the week. Let's just run this with me. And this is all in GMT on the bottom. This is GMT. So because that's the default of MT5. So basically, I ignore all of this. And I don't commence looking at ideas until about like 9:30 GMT, which is like right around here, right? And I'm only looking for strong buy signals. So okay, I start over here, boom, I miss. Okay, so one loss, one win. This is definitely a win. And let's for the purposes of my examples, I'm trading 10 target, 15 stop. 15 stop, 10, 15. So slightly negative, but not 1 to 2 negative, 1.5 to 1 negative. Okay. So long this 0-1, 1-1, 2-1. Okay. 3-1. It's pretty clear that there's no arguments here as to me making money, right? And I'm going to the 1900 hour, and this happens to be a very, very strong uptrend. So just to prove to you that that I'm correct here, this is coming in at 31, right? The lowest possible trade here is 22. Remember, I have a 15-point budget. I think actually, hang on a second. What's the lowest possible trade? Is 25. So still, it's sorry, I'm coming in at 31. Minus 15 is 16 is my stop, and the lowest I get to is 25, and then obviously I make 41. So now I'm at 4-1. Okay, now I'm at 4-1, and I'm looking, and I'm going to stop at the 1900 hour, 1700 hour, 5-1, and I think I can squeeze out one more at 6-1. So it's really sort of a super, super good day where I'm straight up. So this is interesting. If you were trading on an algo basis and you told the algo to stop at 1900, this is 1838. This is 2 p.m. in the afternoon in New York. And I get long here at 06, right? And there's such a massive spike here. This actually goes to, sorry, this is 06. What's the high here? Oh no, I take it back. This one would stop me out. Sorry, I thought it went to 16, but it went to 14. So it stops me out. So that's 6-2. Okay, that's 6-2. That's day one. So now we move through, and I'm just moving through until we get to like the 9:30 hour, so we can start looking at trades, right? So this is 8:30. We're going to pass up on this. Sorry, so that was 6-2, right? That was 6-2. Okay, so now it's 6-3. This is obviously a false. We get tripped into a false trade. 6-3. Now it's 7-3 because this is a winner. This is actually 8-3 because this is long. This extends, right? And now I'm looking for 9-3, and I am looking at. So remember, I'm just trading the upside. Okay, and that's it. So 9-3 on the 6, and then now we get into the 7. So 9-3 on the 6, and now we're going to go into the 7. Come on, baby, come on. We're just trying to move to the basically 9:30 hour. Okay, so this is 10-3, obviously, because now it's 10:05. Starting 9:30, nice clean trade. I'm only buying the strong. I'm only buying the strong signals. So that's, sorry, that was 10-3, right? All to the upside. Remember, I'm just trading upside. 10-3, 10-3, 11-3, right? 11-4, fail. 11-4. Let's see what this does. I'm not sure if this one, this may have failed as well. So I'm long here. Yeah, this was yesterday's FOMC, which was a torture fest. So this came in at 4. So 11-5, that's a fail. And then now it goes to 12-5. Okay, 1700, and that's a 7, right? Great. So that's, sorry, now I'm at 12-5. I already lost track of my time. So now I'm going to today's price action. Now we're April 8th, and we're looking at starting at around 9:30 in the morning GMT. What did I say? Did I say 11-5 or 10-5? I've lost track already, guys. Sorry, I'm just focusing on this. Was it 11-5? Okay, so 9:30 GMT. The 12-5? Was it 12-5? Okay, let's just say 11-5. We'll do great. So this is 12-5 now. This is correct. This is 12-5 as of today. Then we're looking for more upside trades. Only the strong triangles. So here's another one that is 13.5, right? So I'm long here at 31. No, sorry, I take it. This was a stop out actually. I take it back because I had a 15-point stop, and this was a dip down. So this was a stop out. So 12.6, and then this one did T. That's the one we opened the day with, and that was 13.6, right? So 13.6. Okay, so I'm at 13.6 in 3 days. My let's do this here on Notepad. So I'm using a much more favorable risk-reward structure with this thing. You saw it in the charts. So well, come on, Notepaddy. Okay. So 13.6 is 130 because 10 points to the good, minus 15 to the 6, which is 90, right? Minus 90, which equals to 40 points through midweek, which is tremendous. To make 40 points on just a very, very concerted effort. If we can come in at around a 50 points move, we are. Am I misdoing this? I think I'm right. No, I'm right. 15 times 6. Yeah, that's correct. That's correct. It's 40 points if I'm degrading at 13.6. Okay. Midweek. So basically, if I'm keeping that pace, it's almost like this is like 3 days. You're talking about 15 points per day. You're on a pace to do 50 to 70 points in NASDAQ alone. Just on a very, very mechanical, hey, let me just trade 10 to 13. Okay, so that's one interesting approach, right? Another interesting approach, well, and then then you can say, okay, well, what if I wanted to trade the short side? The short side actually, let me just mark this up. The short side actually is mildly accretive. I think you actually make like 10 net points on the short side. But let's just put the short side aside right now, and let's consider something else that I found really, really interesting that Karen gave me an idea about. And when we originally started doing the reverses, we talked about the idea that failure is a far better predictor of success than success is a predictor of failure. In other words, if price fails to go down, it's a very, very high probability that it will go up. If the price fails to go up, it's a very, very high probability that it will go down on the next signal. So, success sometimes begets success, sometimes begets failure. So, that's why buying 2 consecutive ups, sometimes it works, sometimes it doesn't. But if you fail, then it's very likely that the other way is going to succeed. And so let's just kind of look. I'll just show you a couple of examples here. I mean, of this idea. This is not an example of it. I'm just looking for an example of it, actually. Tonight was not a great. Well, yeah, here. No, sorry. This was the. This is actually like kind of a both an example, and it works and it doesn't work. So here's what I mean by failure and success. Okay, so here's a up candle completely fails. I mean, there's no doubt here. It doesn't even go like 1 point your way, meaning this trade gets stopped out, which means that if this trade fails, the short should work. Now, should work becomes a little bit problematic here because if you trading following the futures, it's 93 to the entry, but it goes down to literally 9 points, not 10. So I don't know if you want to count that to be a win or a loss, but the general idea does play out. You know, I mean, the hard, whenever you're doing strategies, you have to understand that nothing is foolproof and nothing is binary. There's a degree of accuracy, and certainly there's a degree of there's a pretty strong degree of accuracy here. In other words, that the getting short here, you had a 90% of your target was met, right? So you went to 9 out of 10 points, right? Conversely, this is where it gets interesting. If you sort of consider that to be a failure because it didn't fully complete its 10-point target, that's how I define failures that didn't go fully to profit. Then this particular signal was actually great. It was a super great, reversal signal and worked really well. And what you are looking for, you're always looking for these, one candle fails the other. And the thing is, you need that couplet. It's not like, it failed 5 candles back. You need to have here's a good example. And by the way, as always, because of the upside bias, we can actually combine 2 concepts. You can say, you know what? I'm only going to trade failures to the downside because NASDAQ is an upside bias market. And if the shorts fail, so here's a short signal, it does not go to profit, It's a failed signal, which means that the next signal is, if I get a buy side signal, that's a high probability that it works, right? So you could kind of combine the 2 ideas. I'm only going to take buy side signals, and I'm only going to take buy side failures. Buy side failures, meaning that it failed to the downside, failed to move to the downside. Therefore, I want to take the buy side signal. Does that make sense to everybody? Please tell me you guys understand what I'm saying. I know I'm stumbling a little bit over this thing, but you get the idea, right? So this kind of creates to me a super interesting way to variate and trade the signals that we generate, right? So, we have the overall market regime, which is our buy-side bias. And then we have very, very tactical, specific entry points that put that strategy into place, right? So if strategy is kind of strategy equals market regime, and just to clarify, the perfect market environment, regime is just a fancy word for environment. It's a French word. For us, given the way things are working, is large upside momentum, right? So what what's really terrible for us is range bound, low volatility, no range expansion markets. What's absolutely great for us is runaway buyers. If we can put ourselves into a runaway buyers entry structure, money is guaranteed. We don't have to look at the screen. It's bankable, right? And you see this pattern over and over and over again. The critical thing is this is why I wanted to throw away everything else. In order to see this pattern, you need to just clear everything else from the screen. So that, because what you're trying to do is focus on 2 or 3 truly high quality signals within the instrument, and then let it fly, and take those trades, because that's when you have the chance for highest success, right? Everybody with me on that? So the sell, buy, fail, sell fails, buy trigger is, I think, a really interesting variant. And obviously when you overlay the strong trend breakout, you just enhance your ability for accuracy, for trading, for trading well. And you see, here's my example of like where failure is so much better forecaster of success. Even to the downside, it's a better forecaster. So here is success. Does success predict success? No. This is success, but it actually fails, right? This is failure, and it predicts accuracy so much better. If you took the short side off of this failure, you had a great trade, right? Failure is always better. It's really ironic. Failure is always better in trading than success, as long as you understand what it means and how to interpret it. So, we're kind of not trading today. It's not that much going on, anyways. I'm just looking at the market. It looks like we're just kind of consolidating. But I really wanted to just talk to you about all of this because I thought it was just so interesting. And now the tools are set in stone, and we have the tools for us to to look at the structure. We can we can really experiment and play around with this stuff. So what this does, the algo just takes buy and sell orders. Like this level of interpretation, Vinod, is level 100 above what an algo can do. Like it's a very high level interpretation. So what I do is I just simply turn the algo off, and then when I have the conditions setting up, I then turn it back on. And what that does is it will ensure that I'm going to get into a trade, because the algo just simply is programmed. Oh, it's a buy. It's a strong buy. Yeah, I'm going to just get into the trade. Now, as I said to you, the first variant where you just trade buys only from 9:30 in the morning till 1900 at night. That's just the algo can do that continuously, and that's just a large sample set that skews your way, basically. The short horizontal blue lines are the way the signal works is it's a very simple structure. We have the fast moving average, the slow moving average, which is just MACDs, 26 against 12, right? So fast goes above 26, that's trend, right? Then what we're looking for is for the first 3 candles in trend. So basically this is candle 1, candle 2, candle 3, to have the high of those top 3 candles be broken out. And the blue line basically marks what is the high of the first 3 candles. What is the high of the first, or what is the low of the first 3 candles? You can see that, for example, the low never gets tested, right? Here, this is the high of the first 3. This is the first candle makes the highest high, and the next 3 candles, that's the line, and then the line breaks out. So it's just a visualization of the first 3, and obviously it's programmable. You can make it the first 1 candle, the first 2 candles. We found that if you break the highest high of the first 3 candles or the lowest low of the first 3 candles, that's your best indication that trend is likely to continue in the direction of trend. That's the breakout signal in trend. Okay, Peter? So let's just go over here. Nothing going on here. Let's just might as well take a look at all the instruments right now and just kind of see if we have any interesting setups coming up for us. Looks like the S&P actually gave us a buy signal here. By the way, works super great with the S&P as well. That is, like if you're just going to do buy side bias, and this is a great example, by the way. Look at this. This is a sell side failure, right? Let's say on the S&P you have a, I don't know, if you had a 3-point target on the S&P, then certainly this didn't go full 3 points. So the reversal here at 88 was a great signal. Like, let's just get big here. Let me get big here on the thing. And sorry, you guys wanted me to adjust this. So let's adjust this. Damn it. Why? I still have this stupid ass thing. Oh, I know. Okay. Edit and inputs. Make this 10. Okay. So you can see this. So obviously you see the short sale here really kind of fails miserably, right? It's only like 1 point move. If you're trading S&P with a 6.3, or even let's just for argument's sake, we're going to use a 1.5 to 1 that we use in NASDAQ, right? So that would be like a let's say 3.5. Fine. I'm gonna do 3.5 as my 5 stop 3 target. So clearly 3 doesn't go here, but getting long over here at 89, I'm looking for 92, right? So I'm almost. It came up to like 91.61, almost to my full target here. The idea being, failure is failure, especially failure to the downside, is especially powerful signal for an upside trade. So like that little pattern of trading upside after the downside fails is, especially during the high liquidity hours, but even the non-liquidity hours, is super interesting and really, really valuable trade for us to take a look at here. I'm just gotta get small here. You see, by the way, how sloppy the S&P is. Just like during the non-liquid hours, it's so it's so tight. And this goes back to the original idea that I talked about, that I think even though the S&P is super liquid, it's just not nowhere near as volatile as the NASDAQ. And to me, it's probably a much better tool for higher time frames, because on higher time frames, you're going to get less signals, but they're going to be cleaner, clearer signals, right? Even if you, here, this, by the way, that's actually interesting. Look at this. Well, yeah, you can tell this is, so all of these signals fail in any which way you look at it. Why? Because this is non-liquidity hours. No, this is like the worst. You absolutely do not want to trade S&P during the Asia session hours, because there's just absolutely no movement. It only starts getting movement at kind of like mid-morning Europe, and then obviously North America. That's when you want to do it. But like at this point, so this is what time is this? That's 1400. This one is 7 hours to the GMT. So this is B minus. It's 1100 GMT. So this is 1100 GMT on this particular chart, because of the way this particular clock works. And that's a good signal. It's a failure signal to the downside, but it's a great signal, right? And this is obviously, what time is this? 21 minus 7. No, that's 1800 GMT, just before our cutoff time of 1900 GMT, and that's also a really good signal here, right? And then, what is this? What time is this? That's not a good time. 4 o'clock. We're just gonna. This is a 5-minute chart, so I am, I'm trading this. And this, by the way, so is this today? Yeah. Oh no, this is the 26th of March. Sorry, 26th of March. This is 1900. Yeah, 20. Again, this is a 5-minute chart. So 1900 minus 3 is 1600. Another. So again, U.S. liquid hours getting a strong signal to the upside is a great trade. U.S. liquid hours failure, in this case, this is a downside failure to the upside, still very, very good. Basically, if you're trading upside trades during U.S. liquid hours or downside strong trades during the U.S. liquid hours, this is not a liquid hour, this is 7 o'clock, then you have very, very high probability of success. This is the only trade I see on the charts right now. We had like 5 or 6 trades. That is a clear failure. So this is 1500 hours. That's -3. It's 1200 GMT. It's a sell trade, and this sell trade, fails. Fails big time. Here, the buy trade succeeds nicely. What is this? What time is this? Yeah, this is 8 GMT. So again, we're not trading this. But here at 1100 GMT, when Europe basically wakes up, yes, you could trade the downside, but you still see how the downside is nowhere near as almost every single up arrow during U.S. liquid hours is a win. This is a win. This is a win. This sometimes it's a win, sometimes it's not. Your probability of success to the upside is almost always like at least 20% higher. And that's a very, very important point to appreciate, because once you see that this upside drift bias, you can just eliminate a lot of unnecessary losses by simply staying to the upside. You see, look at all these are all upside trades, and they're just monstrous. Yes, finally we get a downside trade that works, but it's more of an exception than the rule, and we're looking for the rules. So oh, sorry. While I was talking, I actually triggered another Nasdaq trade. I'm sorry, guys. I'm blabbering away, and I'm kind of missing some of the trades. But where's my thing? Yeah, I'm in trade right now. I'm just gonna take this trade. Hang on a second. Toolbox. Let's take this trade plus 17 or whatever. I'll take the trade. So yeah, this was another. Remember, this was a very, very. I remember I said that this was the short trade, and it didn't quite go full 10 points. So it was effectively that was a failure. And here, short fails, long succeeds. This went almost. Let me see if this was a trigger at 29. How high did it go? Yeah, it went to 10. It went to 10. This made the full 10 points. I just closed it out just a tad bit early, but it would have made the full 10 points. So that's the example that I really, really want you guys to practice. The buy sell fail during U.S. hours is our best bet, especially, and this is the thing. Just think about this. If this is effectively like a what do we say? Like just the buy side bias. Just the buy side bias was a 12.6, right? So that's 12 divided by 18, which is 12 divided by 18, which is that right? Why does that seem so little? Yeah, I guess it's a 66% trade. Oh, I thought it was a yeah. So no, that's correct. Okay, so if just the upside bias is a 66% bet, and our break even on a 1.5 to 1 is 60%, so that means we have like a 6% positive spread. I'd love to have a little bit higher, but 6% is positive. The thing that's cool about the buy sell bias, the failure bias, is I think it's a 70, maybe even a 72% bet during the U.S. hours. Like in other words, when I find the failures, I think there's less of them, but they're going to be more accurate. So like just for example, this is one. I'm trying. I don't know if I can get to. Let me see if I can do this. Let me see how many failures I have. Okay, So I'm looking for buy, sell failures. Okay, this is a sell failure. Am I looking? I want to look at only during the high liquid hours, which is really going to limit my trades. But let's just do that. We'll do this is our final exercise of the day. Let's just see how that works out. Okay, this is success. These are all successes. This is a failure. 1. So 1, 0, 1, 0. I'm looking for the buy sell failures. There's nothing going on over here. So we'll move on to the next day, April 6. A little too early, so I can't really count this. I wish I could count this, but I can't really count this. So here, buy sell failure, 2, 0. 3, 0. You guys seeing it? You guys seeing the arrows over here? I know they're a little bit smaller, but I just I don't want to change them around. You see the arrows? So it's like now I'm at 3, 0 on the moves. 10-15 for the S&P is not going to work. Not for a 1-minute chart. The S&P is 1/3 the volatility of. Just think about it. The S&P is a 4,000 index, and the Nasdaq is a 13,000 index. So you're not going to get the kind of moves that you get in the Nasdaq. Plus, S&P is much less volatile than Nasdaq. Okay, so I was at 3, 0. I have no trades over here, no trades over here, no trades over here on the 6th. Let's go to the 7th. Again, I'm only trading liquid hours. So I would trade this. I would take this. So now I'm at 4, 0. I'm at 4, 0 just on this. No trades here, no trades here. This is a success, so it's not a failure. This is a failure. See, even though this is a big failure, this is a failure, so this is 5, 0. So now I'm at 5, 0. I mean, you literally look at, I've stripped myself down to 1/3 the trade size. I had 18 trades just doing it mindlessly. I have only 5 trades where I'm filtering it out like this. But look at my accuracy criteria. So now I move on to today's price action, and we get into okay, one more fail our way. So now I'm at 6, 0. Remember, I'm starting around 9:30. So this is a fail, this is success, boom. So I'm trading the upside. This is actually, let's call this success. I can't really take, I really can't take that trade. And this is a fail that was a success. So I'm literally at 7, 0. So yes, I've cut my trade size by 66%. Instead of doing 18 trades, I've only done 7 trades, but every one of those trades was a winner versus, in the other situation where I had a lot of volume, but only came up with a 66% win rate. Having said this though, the other methodology, which is just taking the buy side, just taking only buy trades, really didn't, it did a lot of trades, but it wasn't, even though it wasn't as nearly as profitable, I still made 40 points that way versus making 70 points this way. Now, yeah, I've almost doubled my P&L, but remember, just one loss will take me down to 55. So, this is an unusually smooth run here. So, I think both strategies have merit. Both strategies have edge. This one clearly has better edge in the sense that you have higher accuracy, less trades. I just want to leave both of them in your hands for you guys to play around with. All right? Does that make sense? But I definitely think, and you could also kind of run them contemporaneously. You could even run 3 strategies. You could say, I'm going to run buy sell failures. I'm going to run just buy side bias only. And I'm going to run sell buy failures. Sell buy failures is if I get a buy failed, and then I'm going to take the sell signal. You know, I think if you run straight up sells, just sells during liquid, you're going to break even. You're not, it's incredibly hard to make an edge on the downside, even with all the filters, even with the lower lowers, highs, and everything else. I think the best that the edge is going to give you is probably flat. That's why you need more interesting, more innovative setups to really get the long-term edge. All right, let me get rid of this. Let me get rid of this. Yeah, the algo is in the Dropbox. They're both the beta version of 4 and 5 are in the Dropbox, Grassy, in the combo box. They're over here. Where's the thing? Hang on a second. Sorry, hang on a sec. Man, my dogs are going crazy because the long guys here. Combo trader. Here, I deleted everything else. So now this is the most current ones. So this is the beta 5, beta 4, and the 2 indicators. I'm in Jersey, my friend Peter. I'm not in New York. We live half in Jersey, half in New York because of the pandemic. So I am now, everybody's making fun of me because I'm now Mr. Suburban. So the big arrow versus the small arrow. The big arrow is, let me just bring this up to you. So the big arrow is strong trend signal. Small arrow is weak trend signal. And the differentiation is that if it makes a higher high, that's a signal, it's a strong trend, right? So if this thing is above the prior arrow signal, then it's a strong trend. In other words, they're buying with higher highs, they're selling with lower lows or lower highs. That's how you get the big ones. The small ones is when that doesn't happen. That's the methodology. So that's basically it. We pretty much, I think, qualified and quantified everything. And now, now it's the fun part, because now we can put it all together, try to trade the failures, try to trade pure breakouts if you want. But, now we have the tools to do everything. Miguel, ¿cómo va? Okay. Thank you, guys. Let's huddle up tomorrow for a little bit more trading. I'm sorry, I really, really wanted to go. This requires a lot of intense conversation to get it right. And I'd much rather have this conversation than just like take trades blindly. So tomorrow we'll take trades blindly. We'll have fun with that. I don't know, Peter. I fucking hate Forex.com. So I don't know. Forex.com has a very bizarre MT4 platform. If you're a U.S. citizen, I really suggest you just open up an Oanda account. We trade on Oanda. Everything works beautifully on Oanda, but you can try it. I mean, it should, in principle, it should all work. But I hate Forex.com, so I'm not the person to ask. Kevin, you've been very quiet, but I'm assuming you absorbed all the stuff here, right? All right, guys, I will not torture you anymore with my dog barking. I will see everybody tomorrow. Everybody got that? Oh, you got that too? Oh yeah. You could, this thing works. We have it done on this way that you can do multiple exits on Oanda and it'll work. Okay, guys, everybody have a great time. I'll see everybody tomorrow. Take care. Bye-bye.